Good morning. Today's date, 5/15/2012, 5:50 a.m. Pacific Standard Time. Nasdaq 100 pre-market futures update. Nasdaq futures are up 19.5 handles and have been gapping up since the very early morning. And then there was a period where they had just drifted higher, and then the futures had pulled back. Equities are going to trade that way today. Equities are going to go up to the top end of the price channel. They're going to come back on the pullbacks, and then they're going to consolidate and try to break higher within the original reversal cycle of the Nasdaq 100, my friends. Now, let's take a look at each sell wick that we had there, and that's what equities were doing. They go up, hit resistance, and bam. And this is just a daily chart, but once again, MMT, it's pre-market, and I want you to know that that is slide to bid, and this is slide to bid. And yes, you did make lower lows, and you got right back over here where they came in. Now, in your MMT platform, this is a standard chart. Now, equities will trade like the futures, and if the futures, once they make their highs, they'll pull back, but then they'll run up and test the highs again. And remember, I'm telling you this before the market opens, not afterwards. And then we'll go into a lot of other gaps in this pre-market opening bell session. And what are we looking for is that once you get counter trends, and let me explain that to you on how Nasdaq equities are going to trade on the day. And here's how they're going to trade. And I've always showed you this is reversal 1. And we finally got down here to my lower price trough. What do I mean by that? Really, there is a lower price that they need to come to. But there's a little bit, and the prices, you know, we'd like to see where you get down here where the 5-day consolidation started. That's this area at 25.40. This is where you gapped up, but this is where, you know, you started ascending early in this time frame of the breakout, and you just went higher. So, but then we got to the highs from that area, and we got to this support level here from this counter rally to this pullback, and now we had come back up here, all the way back up here. So let's go all the way to the top again. And now equities are going to trade the same way, MMTs. That means that based on the pre-market futures, when the futures go up and they hit the wall of resistance and they have their, you know, 5 to 17 pullbacks, but then they land and hit price action support, then they wind right back up and run to those highs, and that is the price directional movement. And that's the movement that you want to be on within the support and resistances. So the Nasdaq 100, which Apple trades in, that's where these big gaps are coming from. Google is one, Priceline is another. There's all kinds of them gapping up, and I can show you right now. Here they are. Apple at 4.52, Amazon at $4, Google at $4, ISRG, we trade it every day. Groupon on the earnings. Priceline, well, it's still on the gap sequence, and Baidu, we were short Baidu, and we got out of those shorts a couple of days ago when it made its bottom. But these are the gap sequences called counter trends. Amlin is about a buyout. So you got Sign and the earnings coming up. You got Netflix. But this is what your Nasdaq 100 on the gap open up looks like. And your gap open down list, okay, well, here's some trouble. Uh-oh. The bear is gapping down 92 pennies. That's the bear ETF called the SQQQ. However, you have these two names, ASEI and ACAT, MMT. You want to find out what's behind the names. Just to give you a snapshot of your listed stocks, your NYSE, you would want to take a look at their gap open up so you can see where the short squeezes are happening over here. Here's that TNH. We like that stock. You can take a look at Signup Industries. That thing has been sold down hard. DIX on an earnings report. PTR, that one is a good one to trade off the bottom. LinkedIn, it got sold down. We shorted those earnings. Got the stock down below, I don't know what it was somewhere around 107. Got out a little early, but we had a great movement, but then we're long off of the bottom because that means that they're sold out, and they are. MasterCard is ready. CRM. Here, I've got it right here in my ticker. I'm watching that bid and that ask. It too has a gap. We trade this. It has nice directional movements. We are masters in the bid and ask at lower support levels and selling into resistance on Salesforce. This one here that I talked about, we had shorted those great earnings. We were short this name back in its earnings report right here. But now it's time to be long. Going back up to resistance, and then it'll be time to go short, and we'll have to get out of the long side because the long side pays on these gaps, and that means that the shorts are getting taken out on the earnings from them that they had reported. And they reported okay. They sold the stock down, we shorted it down, and then they popped it. So we have these great names to trade today, and each one of these names will bounce off the support levels. Here's a CF Industries. It's been sold down gravely hard. And I'm going to conclude that Nasdaq 100 and the counter trend is in play. So based on this wick, this daily wick in the price, is where we're going to see where they come back up, because equities now, MMTs, are going to trade the same way off support. Here you go, right there. And there are different levels of this last sell day, the prior day, because we're using the Nasdaq 100 daily chart. Okay? And it's to let you see what the public looks at. Our MMT platform is totally different. And people who would like to know what that is, go to the trading platform page on the website, and you'll see it, and come and witness it. So here's the reversal, here's the counter trend, here's the resistance levels toward the tops. And when you gap up, let's say you gap up here, remember, your upper price level and price volatility runs in both directions. And I said that would be an increase in price volatility. I said that over a week ago. And the first trading day of April, for 90 days, I said price volatility would increase, as it has, in both directional price movements, so that you are getting that lower entry and selling back to the public at the higher resistance levels, unloading what you buy wholesale all the time, going long and short, and understanding this right here. These index options pay a lot of money. Now let's just take a look here at some of these other movers, like the Priceline daily chart. I just want to show this to people very quickly. And what I want to show is I'm going to draw a horizontal trend line right here. And I'm going to show where the lower leg of the breakout occurred. And here's that ascending part of it. It starts here, and it comes right to here. And we're hitting this support level of the original calendar rip inside, bull side breakout on Priceline. And now we have these tops here on Priceline, and I'm featuring this in pre-market live at 5:59 a.m. Pacific Standard Time. Date is 5/15/2012. Why? Because we have market makers that will make markets. Now let's take a look at why you make money. Here is why. On the daily chart, since we were shorting it up at the highs with MMTs who are witnessing that. And I said you come down $100 and you were living up to it. Now, we didn't come down and test this bar right here yet. However, what you're going to look for is you're going to look for the bounce that takes you to the upper end. And we're just draw a trend line right there. That's 671. Now, let's take a look and see where the gap is right now. Where's it at? Priceline here. Right now, at 663. You got a 665. That's your bid and your ask to the close. Okay? And a lot of these high betas are relatively gapping in the same direction. And I will talk about what to do with Priceline. Priceline is very nice because this 560 call as a market maker on a monthly expiration is tradable because you see MMTs, people owned it at a very high price. The 660 call on Priceline is what I will have bigger traders look at because it's been marked down 10.50, and the people in our live option pit rooms that we have available to people that want to learn how to get that low bid. We have 3 different rooms. One starts at $3,000 a month. There's a $5,000 a month one, and then there's a $10,000 a month one. They're seats that you buy. And then I give you the bid at wholesale, and you make money selling back to the retail, and then you end up paying for your seat that way because that's how you pay. And anything above that for the bigger people, and that's people that trade big volume now. Okay, the $10,000 a month one, you have to be trading 100 contracts or more in options to even qualify, and that's an option seat in that room. And those people's profit objectives are a minimum of $100,000 a month, 1.2 million a year plus higher. And that's still in the bid. And understanding how the calls got whacked. So, when the market opens in 24 minutes, based on the gap sequence that I have over here, and all I'm going to be doing is taking Priceline right along with the broader market. And you can see that the gap isn't real big. So that means that the price gap ratio opening of the Priceline, we will keep the drop down lower bids. Another one I'm going to feature, one that has not caught up to the Pricelines of the world. And once again, it's from a daily view. And it's on a standard platform. Okay, it's not your MMT platform has your answers. But one of the things that we want to take a look at is Google in pre-market. And what are we going to do with Google? Well, we're going to do a lot with it. It's gapping up with the rest of the market. That means that the price is artificial. What it means is that the 605 goes down in value where you would buy more. And you would add to the 605. I'm going to move this Priceline thing out of the way. And as far as the 600 put goes, which is 480 by 5, you would want to put them out at $4.90 to sell here. However, here, when they mark it down, so if you take $7 and they mark these down toward $5 or $4.60 in here, $4.20 in here, you want to buy. And basically the daily chart tells it all right here. As I've said, one thing about the daily, like all of the stocks and bull trends and reversals, this one hasn't caught up to its peers. It will at some point, I guarantee it. And you can see these daily cycles. See, they take them up, then they bring them down. They take them up, but then they bring them all right down to this trailing 200-day simple moving average. Well, that's all standard technical analysis. Who cares about that? Look in your platform. Your answers are there. What I am saying is, from the prior day, there was a gap down. and we come down here toward these lows. And this support line right here, let's just take a look at these two bars right now. And let's take a look right here at where resistances are going to be in this area. First of all, we're going to look at and see what the response is to the lower end of this bar. And that's 605.26. If that becomes new support, then and wants to trade up to the higher resistance levels, let's say right now, let's draw a trend line, and this is between the daily moving averages, 606.89. Now let's go to the top of the wick. That's 608.52. Now let's go to one of the highs that we have here on Google. But every time we hit the high, we did make that lower low. And within the price action ranges, we get to here. We do slide the bid down because it did. But these are going to be the price levels of resistances that happen. And they do happen in this area. So we're going to draw one right above here, because this bar, that's right below the 610 area. Now, what they do is they do this. They take that close, that's $2 gap, that's 606.88. Add it up. Dollar ratio gap relative to where that hit support. And if it hit support, as a market maker, I would have these out to sell at 690, and I would be buying back these very same contracts. I would be buying back these contracts here at the lower price level. So I'd have a limit order out at 690 just to, I still make money. He has to gap it down to that support level, and then I'd flip over to the $600 call that hit 1230 on the high. That had a $4.30 range. And they went up and made their high yesterday, but then they went negative too. So you can see where the call went negative, and you can see where the put went negative. See? So, listen, this side of the market, Mr. Plain, is tradable at the wholesale bid. When the gap side comes down to support level, Mr. Plain, you're going to want to do that side. This side of the market, my friend Alex, you're going to want to have the limit orders out to sell. At 690, you're guaranteed a transaction. Put these out at 490, and we'll start over on the day as far as this goes. And I don't want to be bothered, but I did give the pre-market. We open up now. And I'm going to tell you that the diminishing gap is a way to exit here and look at buy this side over here now. That call, Mr. Plain, down on the low end. And this side, now that I'm going to conclude the video in the pre-market, and I've updated that one, and I've updated this rat. So the gap is selling off just like it did in the futures market. We're still in pre-market. But it peaked, and we sold it short, and we're making about $2 on it right now. And what a nice way to wake up, throwing money in your face. Because these Apple 565 calls, they're good to trade. Don't tell me they're not when they are. Another thing that's good to trade is that 560 Apple call that got marked down big. That's going to have a trade off the bottom. This is pre-market. Now, what can I say? What can I say? Another one that I'm going to put people on is this one here. This Google 610 put is another trade. 610 coming up. 610 coming up. And here's that 610. Here's that 610. This one here, we'd like to get this for about $5.80 and make a boatload of money, but you'd have to bounce off support. You have to buy the call, because if you're going to buy the call, if this is going to go up, to the 610 area and test lower highs in this area, and this is a wall of resistance, well, listen, that's when these prices would come down in this strike price, but this transaction would happen very quickly. One person does this transaction and the other one does this one, and they put the limit orders like I tell you now. That's the end of the pre-market. Ready to rumble. Monthly options expiration and everything you want to learn. High frequency computing models and reversal trends. Selling short the gap to support and bouncing like a rocket.